Thanks, Zipo. That was a very kind introduction, and I hope I'm able to do this justice then in the closing remarks. I'm going to do this in a bit of a weird way, Zipo. You probably know that I'm going to do it this way. I was thinking about what should I cover in the closing remarks, given the absolute richness of dialogue that we've had across 5 panels. And it's probably not easy to kind of sum up, etc. So I'm going to leave that to you. But what I thought of doing is something really unique, and I'm hoping enjoyable to those still listening in. What I'm going to do is just share 5 very selected quotes per session that we've had. And it's a way of, I think, recognizing the excellent speakers that we've had and honoring the thoughts that have been shared. So these are not my thoughts in particular, they are quotes from the different sessions, and here we go. I'll start off with one from the Deputy Governor, because I think it's an overarching kind of quote from his speech that sums up a lot of the dialogue today, and then I'll go into each of those particular sessions and share 5 quotes. So here goes. Quote number 1 from the Deputy Governor: as the digital economy continues to be embedded through the use of mobile devices, the use of social media platforms, and generally increasing activities over the internet and online commercial platforms, we will increasingly create and leave behind digital breadcrumbs of unprecedented volumes. Never before have we seen such volumes of data. I thought that was very apt. Then let me turn attention to the first session. I thought it was such a wonderful session. Quote number 1. With regards to Bitcoin, or the Bitcoin run, this one makes more sense. It's institutionally driven, lots more going on under the surface, feels more substantial. In the past run, there was not a lively derivatives market, no stable coins back then. Now it's institutionally driven rally. Professional fund managers move as a pack in search for yields. Second quote, the German finance minister stated that currency monopoly must be in the hands of the state. Central bankers don't appreciate the sentiment around unconventional monetary policy, or don't appreciate something scarce such as Bitcoin. Third quote, central bankers must be a part of the play. The mandate of the central bank is different than private participants. 80 to 90% of central banks working on CBDC. For institutions so old, they aren't failing too badly. For example, during the special Chinese holiday, for the first time, there's going to be retail users in China using DCEP. Fourth quote, this tension between private and public sector is a false narrative. There are billions still left out of the financial system. There are still interoperability challenges, debt by 1,000 cuts. Access to money and interoperable systems is a human right. Last quote from the first session. So 10 years ago, did we imagine that we would be talking about central bank money on a blockchain? So 10 years forward, we'll certainly have different types of money, digital wallets, we will have different types of payments. Is this all a world we want in terms of economy and politics? What is fascinating is that we can have this discussion with people with very different kinds of view. So I applaud the first session. I thought those quotes were really apt of the kind of dialogues that we're having. Let me turn to the second session on people and talent. First quote, it's all about the DNA to attract talent. It's about culture, but it's about stretch. It's about challenging talent. We are very clear about talent that we're looking for. We are not looking for the 1%. No. We're looking for the 0.01%. Those who can change the economy and impact South Africa. Second quote, experience matters. The CEO has experience in a chosen sector, but sometimes the rest of the team doesn't. This is a gap we've seen. Building a business is really hard. We assess, do they have experience working together? Are entrepreneurs fixed in their mindset? Can they adapt? Are they willing to see the actual gap? Third quote, infrastructure is important. People have distributed teams working from different geographical areas. Some reliable digital infrastructure is required. It must enable finding talent from Venda to Cape Town. Fourth quote, we need to take a chance on people. We need to invest and train people. We need to access funds for training. We need proper investment. The money is there. Is the money going to the right areas? Lots of funding goes to outdated skills programs. Last quote. It's not about who you are today. It's who you aspire to be. It's the land of opportunity. As long as you're willing to put up your sleeves, there's opportunity. Fantastic. And again, I applaud the second session and the sentiment that have come out of it. Third session on the future of banking. Quote number 1. We don't have to go brick by brick. We are a digital bank, but partner with others for physical touch points. It's important. It's important as you get scalability, but trust from looking customers in the eye. Second quote, what hasn't worked out for retail banks is how to shift this balance of power and do things with partners collaboratively. We treat FinTech partners inconsistently. We need to change not only our mindsets, we want to be a friendlier partner. Be careful, you don't want to paint them all blue. Third quote, we have an immense amount of data. We are a behavioral bank and aim to make clients wealthier. We need access to real-time data. We provide incentives back to the customer. Claim less, there's more money. The way you behave on your health, how you drive, and how you manage your finances all matter. Data is at the core. Fourth quote, our competition is so stifled. We need a telco and a retailer partnership. It would force banks to create new value and value propositions. I'd like to see a non-traditional marriage. Last quote from the third session. Innovation is a rising tide, and our open banking API is about customer-centric innovation. It gives innovation super juice, but we haven't worked out the balance of power yet. Stability risks versus embracing the innovation challenge. However, it's what makes life exciting. Again, I applaud the third session, some fantastic comments, fantastic insights on the future of banking. Then we turn to the fourth session, which is really around trust and cybersecurity. First quote, connectivity is central to financial institutions and all of us through mobile, laptops, TVs, etc. There's a spike in the usage as a result of COVID. Increase in traffic over the internet by 600%. Never seen the type of problems that we're seeing now from a cybersecurity perspective. Second quote, there are two key lenses that we need to accept, tech and ecosystem trust. Tech is an exciting space, but these 4 IR building blocks, AI, machine learning, 5G, COVID has accelerated the adoption of these tech, both for banking and non-banking. Moore's law is therefore not dead. There's a seismic shift in tech capability. However, bad guys are also embracing AI and machine learning, etc., to apply their trade. Third quote, the ability to deep dive unstructured data and machine learning and to detect fraud patterns takes away manual intervention. Profound. Okay, fourth one, IP addresses and emails. Email is still mostly used application digitally, used to run businesses, crucial tool for functioning of businesses. IP addresses, where does it come from? All these IP addresses could be compromised. Phishing and ransomware emanates from here. We must think of an alternative way to communicate. It's a $26 US problem. Last quote, in 3 seconds, I've made a payment using screen scraping. How do we do this in a less cavalier way? Having dialogues around security and risk needs to be more organic. Again, I salute the fourth session and all the thoughts that they shared. And finally, we've just heard from the fifth and last session on the importance of innovation. I've picked 5 quotes and hopefully they resonate. Quote number one is a short one, but a powerful one. Remember, many of our users are second language speakers. Second quote. I love this quote because I think it's about the encapsulation of what are platforms. Someone who needs something, somebody who provides something. The question is, how do they find each other? Like the Tinder site for SME lending, platforms rule. Third quote. Given the melting pot of challenges in South Africa, it's where entrepreneurs are at their best. If we want to be successful, there are a whole range of ingredients. The youth need access to funding, mentors, value chains, access to customers. We need to tackle innovation from a holistic perspective, the right skills, the right education. Fourth quote, every South African needs a side hustle. How do you get that side hustle into a tangible business? The real opportunity lies with grassroots innovators. And finally, the last quote for the day, Zippo, put out challenges to those who wouldn't ordinarily tap into this space. We've just scratched the surface of FinTech. There's still 350 million unbanked in sub-Saharan Africa. In the informal space, there's lots to be done. In the rural space, there's lots to be done. So I thank you. Those are the closing remarks, Zippo. I hope they are in honor of the participants. They've given a feel for the richness that we've got out of the dialogue. And my final quote, I think, goes back to something that Herko shared. If we want to go fast, we go alone. If we want to go far, we go together. Over to you, Zippo.
Thank you. Thank you. Thank you for that, Arif. And I'm not going to let you go without my closing question to you, because, I mean, you've shared a lot about what the panels said and the quotes. They were very, very powerful. What was your biggest insight, particularly, you know, looking at it as from your chairperson perspective? What is your main takeaway from everything that happened today?
Oh, yeah. I think my tagline is collaboration matters, right? And I think one of the speakers, it could have been Naomi Snyman, who said, we need more public-private partnerships. And that's the biggest takeaway. So how do we get that going? We've now got an IFWG membership. It's made up of 7 regulators. In my own mind, how do we stretch that asset? How do we make sure now that the FinTech community becomes part, you know, of that membership, in inverted commas? I understand it's a bunch of regulators. How do we bring in academics? How do we bring in other institutions? So my tagline is collaboration matters. Okay, we've got some really, really big substantive problems to solve for in the financial services space. And we have to solve for this together. Central banks, commercial banks, FinTech firms, academics, technology partners, all of them. That would be my biggest takeout.
Thank you. Thank you. Thank you so much for sharing that. Collaboration, collaboration, and collaboration. Thank you so much, Arif, for taking the time and really putting these thoughts together and sharing with our global audience so that they too can get a summary of some of the themes that came out. We really appreciate it, and all the best to you for the rest of your day. Thank you, Arif.